Good evening. It is time for today's tax talk. Excuse me. I am your host. I'm attorney Stephen Leahy. It is Tuesday, Crypto Tuesday, the October 11th, the year of our Lord 2022. And we're going to talk a little bit about crypto and whether a cryptocurrency is a security. The SEC seems to think so. That's what we're going to talk about today. Won't you join us? Yes, it is Crypto Tuesday. We've talked a lot on the show about the battle between the SEC and the Commodities Futures Exchange Trade Commission, whatever it is, and the battle. Now, some in Congress have backed the commodities futures to take over crypto, but the SEC is taking the lead. They believe that crypto are securities on almost every instance, and there's a good article that we're going to talk about today. You know, today I was walking over here. They painted my lobby here a bright white. It had been in gold. Well, it looked good. I liked it before, but you come in and it's really bright now, and it's amazing how just a small thing like a coat of paint can change everything. You think about it, you don't have to change too much to make a big change, and it's something to think about. So anyway, let's get to the as is our want. We will start with the cryptocurrency thumbnail. No, we won't. We're going to start with our favorite crypto site, coinflip.tech. And they have the markets up, and here's the markets. Kind of flat for the day, kind of bounced up most of the day, and then so it's finished right about where it started. About 19,000 for Bitcoin and about 1,200 for Ethereum. Again, kind of mirrors each other. Here's the last week for Bitcoin. Looks like a steady downward slide. Not heavy downward, but still less. It's still hit. It's testing that $20,000 range, and it's fallen below. So it's been below for some days now. So was that the support gone? I don't know. Some think so. Some think so. Let's look at the Ethereum, see where that is. Same thing. Again, kind of mirrors each other. There's been kind of some excitement gone from crypto for many reasons. The decline in the value is one of them. It's kind of been trading right around 19 to 22,000 for some time now. But it's also got a lot to do with what we're going to talk about today, and that's regulation. What the Wild West of the crypto is kind of over. The government's coming in and stepping in and taking control and bringing action and against a lot of companies. Also, taking over their records, so they're reporting to the IRS any transactions, and that's kind of put a damper on the whole party, in my mind. So let's read the story. The Securities and Exchange Commission and other U.S. market regulators are getting serious about reining in the crypto market. I think they've gotten serious about it for some time, and you've seen the executive orders, you've seen Congress taking action. But there's one big unsettled question central to their goal: is cryptocurrency a security? The latter half of the crypto portmanteau, I looked this up, portmanteau, belies the dilemma. Portmanteau means the second half of something. So cryptocurrency. I didn't know that. It's good. It's true. I didn't know. And if you didn't know, now you do know. A deliberate choice by the movement's founders to call it currency, not a security. uh, underscoring their ambition to supplant fiat currencies as both a store of value and a means of exchange. It's fair to say that since Bitcoin launched in January 2009, crypto has become the Wild West of financial markets. In the past, its decentralized nature kept it from prying eyes of governments and other regulatory bodies. Crypto's lack of oversight is the very thing that's so compelling for many enthusiasts. But with few regulations in place, the doors are wide open to nefarious actors who prey on naive investors. The May crash of stablecoin Terra USD wiped out more than $600 billion in value and caused a rash of insolvencies, not to mention a deepening the crypto winter, as we're still in the crypto winter. The Biden administration responded by outlining a framework for crypto development that included nods in the direction of crypto regulation. Nods nothing, they're pushing it. Let's look at the state of play in crypto regulation and see if we get clarity on whether or not crypto is a security. This is an interesting analysis. It's been done on this show before, but let's go ahead and read it. SEC Chair Gary Gensler is on record voicing his displeasure with the current state of crypto regulations. He famously said in June that crypto exchanges that don't cooperate with the SEC are operating outside the law and may be a risk of enforcement actions. Well, that's yet to be seen if they're acting outside the law. He says they're acting outside the law, and maybe that's enough. At the heart of his pitch for making the SEC the sheriff of crypto is the argument that cryptocurrencies are securities. But what are securities? The Securities Act of 1933 and the Securities Exchange Act of 1934 lay out the definition of a security in painful detail, but a more helpful guide can be found in the Howey test. The Howey test comes from a 1946 Supreme Court ruling in SEC versus W.J. Howey Company, which has been reaffirmed in the court several times. Under the Howey test, a transaction is considered to be a security if it meets the following four criteria. Money is invested. There is an expectation the investor will earn a profit. The investment is a common enterprise. Profits are generated via the efforts of others. Promoters are marketing and investing public and the investing public is buying most of these tokens, touting or anticipating profits based on the efforts of others, he said in his September 8th statement. But that's not really the purpose of it, profit, right? It's supposed to be a means of exchange, and you're not supposed to be buying it and selling it as profit, although that's what's happened because of the quick rise. But if I'm still buying Bitcoin just to exchange, maybe I'm not looking for a profit. That's the lawyer hat on me just came out, so sorry about that. In a recent appearance on CNBC, he reiterated his case on crypto. The law is clear. I believe based on the facts and circumstances, most of these tokens are securities, he said. And that means those cryptos must be registered with the SEC under federal laws for securities. The SEC has been cracking down on crypto. No kidding. The SEC announced in May that it was nearly doubling its crypto assets and crypto unit in May. Since then, the SEC, Commodity Futures Trading Commission, and Department of Justice have become more active with crypto enforcement. Take a look at some of the laundry list of charges. On October 19th, the SEC charged crypto influencer Ian Ballinia, I don't know who that is, with failing to disclose compensation he received from promoting an unregistered sale of Sparkster crypto assets. On September 22nd, the CFTC, because they can't be left out, they have to take action, settled charges against B0X and its founders for violating the Commodity Exchange Act and the CFTC regulations. On September 28th, the SEC charged the Hydrogen Technology Corp and its former CEO for unregistered sale and price manipulation of crypto asset securities. Bloomberg reported that the SEC was investigating popular crypto exchange Coinbase for allowing users to trade unregistered securities. The SEC also filed an insider trading complaint against the former Coinbase product manager and identified 9 cryptocurrencies as securities, and Coinbase insists it doesn't list securities. 2 additional cases have been particularly high profile in the recent regulatory crypto enforcement actions. Kim Kardashian's SEC fine in early October, just a couple of days ago, Reality TV star and social media influencer Kim Kardashian agreed to pay $1.2 million settlement to the SEC tied to charges that she failed to disclose compensation she received for promoting crypto asset Ethereum Max on Instagram in June 2021. The SEC fine was over 4 times more than what she made from the promotion. Based on the penalty doled out to Kardashian, the SEC might be more interested in the visibility of its crypto crackdowns. Ripple and the SEC. The other major ongoing cryptocurrency regulatory battle is in the courtroom between SEC and Ripple over the sale of its cryptocurrency XRP. The SEC has brought charges against Ripple, alleging that the company's sales of XRP are illegal securities offerings and that they raised over $1.3 billion through the unregistered ongoing digital asset securities offering. Ripple counters the accusation, claiming XRP is a virtual currency, not an investment contract, and therefore not subject to the SEC securities laws. Seems like a good argument to me. The CEO of Board Peak Partners says the Ripple case should be settled soon, and taking on the SEC is an uphill battle. Any government agency, it's an uphill battle. They have unlimited resources. What you do with your crypto can turn it into a security. If you use crypto issuance to fund your operations, it will get the SEC's attention. So if I issue a coin and then use that coin to fund my organization, that sounds like a security. That I agree with. That does sound like a security, doesn't it? Attorney William Powers, a partner in Nosman, said that the Stop Trading on Congressional Knowledge Act of 2012, otherwise known as the 2012 Stock Act, could provide crypto investors with insight into where Congress stands on the issue. The 2012 Stock Act requires all members of Congress to publicly disclose transactions of stocks, bonds, commodities, futures, and other forms of securities within 45 days of on their websites. The U.S. House and U.S. Senate ethics guidance explicitly calls for members of Congress to disclose cryptocurrency transactions, seemingly implying that they are classified under the Stock Act as other forms of securities. Several members of Congress have subsequently disclosed their crypto trades. These disclosures demonstrate that there appears to be consensus that cryptocurrencies are considered a type of security considered covered under the Stock Act, at least when it comes to trading by members of Congress, Powers said. Future SEC regulations. Oh, they're coming. Currently, U.S. crypto regulations' future remains in the air as regulators continue investigating the market and determining the best path forward. The U.S. Treasury Department is expected to complete an illicit finance risk assessment on decentralized finance and non-fungible tokens in early 2023. Meanwhile, Gensler has asked SEC staff to fine-tune compliance for crypto security tokens. But more regulations may not necessarily be bad for crypto investors, some experts say. Of course they say that. Having cryptocurrency regulations in place would mean that projects, exchanges, and other cryptocurrency-related businesses are held to a higher standard, and as such are beneficial to investors. Additionally, it protects investors' interests, allowing for legal recourse against crypto scams and projects that breach these regulations, said a co-founder of Chief Operating Officer of CoinGecko. But Jeremy Wagner, financial analyst at Tradingpedia, says crypto regulation will also cost crypto enthusiasts. More regulations could also lead to more restrictions on how cryptocurrencies can be bought, sold, and used. Additionally, more regulations could make it more difficult for innovative new projects to launch in the cryptocurrency space. Well, I think it's clear that the government and the SEC in particular, and the Commodities Futures Trading Board also, or Commission also, doesn't want these innovative new projects launched. I don't know if they can stop them, but I think they're certainly trying to stop them. They've been saying all along that crypto was a problem, and they're trying to solve that problem by dousing the flame. And I think they've done that in the sense there is no one's rushing to buy Bitcoin or Ethereum or really any crypto at this point. It's not turning into what many expected it to be, again, a exchange holder of value and exchange. And that was the promise of crypto was to replace the fiat currencies. But of course, the governments have a vested interest in stopping that, and that's exactly what they're doing. And of course, they have the power of the purse and regulation to stop their rivals, and they're doing that. So anyway, that's where we are. Thanks so much for joining us. I appreciate you taking the time. I know that I always ask you to like and subscribe at the end, but Attorney Leahy, shouldn't you do that at the beginning? Well, yeah. I can never remember to do it. So I'm going to ask you to like and subscribe. We need your help to get it out there. And remember, if you have IRS problems, if you have any if you owe the IRS money, or if you have unfiled returns, you should get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com, freeirsbook.com. Get your free copy. We will ask for a small cover to cover the shipping and handling, but the book itself is free, and all the bonuses that go along with it are free. So go to freeirsbook.com, get your copy. So thanks so much for joining us. We will return tomorrow. I want you to be here so we can talk about taxes. Today's tax talk. Thanks so much for joining us. We'll look for you tomorrow. Out.